Hey, it's Ron from the Ron and Don Show, and thanks for landing on howshortamI.com. I'm here with Wes Jones. You're one of the big head honchos there, so thanks for coming in, Wes.
Thanks for having me in.
And we're talking short sales today. I think one of the things I wanted to accomplish with this is there's so many questions around short sales, and I think when people go to howshortamI.com, they hear your stats and go, oh, he sold 1,500 short sales, and they're the number one short sale company for Keller Williams. But there's a bunch of questions. Let's start out, I think, with the number one thing, apprehension that people have is they go, and I've heard this, Wes, I signed a contract. I'm a man of my word. I'm a woman of my word. I don't break deals. And so this feels not illegal, but immoral almost. Like I'm a man of character. And how could I back out on a deal? How could I do a short sale? What do you say to people like that?
It's different for everybody, Ron, and that is a question that we get all of the time. And I think really what it comes down to is, taking a hard look at your financial situation and discovering what is best for you, not necessarily what is best for the bank. Because what's best for the bank is you continuing to pay your mortgage and you continuing to own that property, even if that is not setting you and your family up for future financial success.
And I think the thing that happens is that people get a sense of ownership and they're like, this is my house. I own it. I'm responsible for it. And it's difficult to overcome that. In actuality, you own 1% of that house, maybe, or 3% of that house, and the bank really holds the note. But emotionally, it feels like this is mine and I need to take care of it.
Emotionally, most people do feel that way. And when you go in and you buy a house for the first time, or any time that you buy a house, the last thing that you are thinking about is the possibility of a loan modification, a foreclosure, or even a short sale. But, you're right. When you go back to, looking at the numbers, if, you really only own 1 or you only own 3% of it, if you are upside down, you actually own no percent of it.
Right.
And you're really in a position where you are simply renting this property, from the bank.
And so you've been in real estate for a long time. I think the climate that led to this situation for most people that are going to hear this was really unique in the history of real estate. And let's talk about that a little bit, because I think it feeds into this mentality of I can't break this contract and I'm a mortgage holder and I need to do whatever it takes. In the run-up in real estate, there was fraud that was going on. There was all the loans that we've heard about for years now, and with no money down and no job and no paperwork and all of these exotic loans and the bundling of mortgages, et cetera, et cetera. What it produced, though, is something that's beyond any individual homeowner's responsibility, and yet we still feel responsible.
I couldn't agree with you more. And I love how they called some of those exotic loans or the ninja loans. No income, no job will give you a loan. I mean, you could sit there and we could point our fingers at 17 different people who caused this run up. We could look at the federal government. We could look at the big banks. We could look at appraisers. We could look at mortgage brokers. We could look at any number of people, but the fact of the matter is, we, in the mid 2000s, we saw a run up in pricing that was unprecedented. And, after about 2007, we saw a decline in values that hasn't been seen since the Great Depression. For example, did you know there are still 350,000 people upside down in their homes in Washington? That's not something that any of us can control.
So, Wes, I can just picture a couple coming into your office or sitting down and they feel like, I made a huge mistake. I have horrible timing. This is the worst thing that ever could have happened to me. And it's so stressful that it's difficult to pause and look out and go, wait a minute. There's a lot of people in this same boat. All of us can't be wrong and all of us can't have horrible timing. Something bigger is going on here.
Well, there is something bigger going on. And, there is an element of timing. And if you bought between 2005 and maybe even 2010, or you did a refinance, right now there's still a really good chance that somebody is upside down. But what people really just have to remember is they're not alone in this situation. So many people have gone through this process. There have been millions of short sales and foreclosures in the United States since about 2006. And this is not any one homeowner's fault, and they just really need to, understand that they're not alone. Other people have gone through this, and it's not their fault that they are in the position that they, are in. They can't control what happens to their home's value, but they can control what they can do moving forward about it.
Okay, so finally, and we'll put a bow around this first point. If the term short sale is a dirty word in your family, or you have negative connotations on that, talk us through exactly what it means and why it's there.
Mm-hmm.
You're not breaking a law. Someone who does a short sale is not breaking the law. It's
not at all
immoral. It was invented for a purpose. What is that purpose?
The purpose of a short sale is simple. It is to help a homeowner who is upside down in their mortgage get out of a loan that they can no longer afford, or it no longer makes sense for them to afford.
Okay.
So what that looks like is, it's simple. It's putting a house on the market, offering a current market value for it, and having somebody like my team going in and negotiating with the bank on their behalf to sell the property for less than what is owed.
All right, let's go down this road a little bit more, because the next thing that I think can happen is you're upside down. You start to stress. Your family emotional life can go into turmoil.
Mm-hmm.
And, we don't need to tell you, everyone knows the studies about the stressors on a marriage, that money is number one on the list. And so talk to me about the psychological weight that you see people coming into your office with, because I can imagine this could be just the 1,000-pound elephant on your shoulders all the time. It's all you think about.
It really is, and it is heavy for a lot of people that I talk to. This is maybe a home that they bought 5 years ago, and maybe 2 or 3 years ago, they really realized where they were at. And, we've come to realize that the housing market, although is recovering, may not be recovering quick enough for them. So this is oftentimes the biggest stress in somebody's life. And, things change over the course of owning a home, and, people get promotions, people lose their jobs, people, add members to the family. And when you are looking at the cost of your housing likely being the biggest expense on a monthly basis for any family, this is something that weighs on people, day in, day out. And I see people lose sleep over this. It causes problems, within their family. I see people who are not performing as well in their jobs simply because they're so far upside down and they don't know what to do, and they believe that they're stuck.
So what do you tell people that are considering, maybe I'll take money out of my 401k. Maybe we got some money set aside for savings. Maybe we sell a car. Maybe I borrow money from my parents or from a sibling, and I'm going to white knuckle this thing until we're good. I bet that's one of the options people are going to think about.
Yeah, it absolutely is. I know the way that I was brought up, my dad told me that the first thing that gets paid on a monthly basis is your mortgage payment. So that gets paid before anything else. I know a lot of other people were brought up that way too, and that's the way that the banks want us to think, and that's the way that the credit agencies, want us to think. So it's painful. It really is. It's painful for me to hear people who are borrowing money to stay in a home that's upside down, borrowing from their 401k, borrowing from friends or family.
Putting it on a credit card to get double interest.
Exactly. When most people are in a position like that and they're borrowing just to stay in a home that's upside down, it's not usually a good thing for them.
And you're not thinking clearly, because if you stepped out of that and it was a friend of yours that told you this, you would say, "You're crazy. You're upside down. You're paying more than you have, and it's not worth what you're paying for it." It's really clear when you're looking at it from outside, but when you're inside there, your brain is just telling you, you're just trying to keep your head above water.
Yeah, if they were to take a step back, they would say, geez, this doesn't make a lot of sense. I just feel like I'm throwing good money after bad. And I think that in most situations, they're probably right. They probably are throwing good money, after bad money, racking up credit card debt, just to pay your mortgage. And if somebody's behind on their mortgage, whether it's 30, 60, 90, or even more, they just need to give us a call. The worst thing that you can do is stick your head in the sand. And so many people do this because they just don't know what options are out there. If they call us, we can let them know what their options are. And there's some things that we can do to help arm them to make their decision and even slow down the foreclosure process.
All right, it's Ron from the Ron and Don Show. I'm here with Wes Jones from HowShortAmI.com, and we're trying to go through some of the things and some of the obstacles people have against short sales or in their mind when they think about short sales. And so, Wes, let's talk about the mechanics of a short sale, because everybody that is in this boat has bought a house, maybe multiple houses, and we're familiar to a certain degree of how that works. I go in, we find a bunch of houses we like, we pick the one, then we go to the bank. And people are used to those steps. A short sale process is really different from that. There's a lot of things that we've never done before. So walk us through, let's say I decide, okay, we're really upside down, 6 figures. We need to get out of this. We're going to do a short sale. What happens?
Once somebody decides that a short sale is right for them, we take a look at listing the property, but we really take a backwards approach. A lot of people have sold their homes in the past, but a short sale is going to be different. And, there's going to be a document collection period. And, we're going to be looking at collecting financial information, your pay stubs, your checking accounts, your tax returns, and whatnot. And we're going to go ahead and collect those, and we're going to go through them and just make sure that everything looks good before we go ahead and send that off to the bank and set up a file.
I can imagine the one moment that you get a lot people's eyeballs popping out of their head is when you land on a price that you want to short sale the house for. And they go, my God, that's $150,000 less than what we paid for it. That can't be the real number. We've been paying this mortgage for 3 years.
We get that all the time, and it can be a shock, and it can be really hard to stomach.
It's depressing.
It is depressing, but I really think that at that point, that's when people understand really where they're at, and that this can make a lot of sense for them, and this can be a real lifesaver.
So do people kind of go through the 5 stages of grief at this point? Like, do you become a counselor in some ways of going, I'm mad, and then I'm sad, and then I finally have to accept that, wow, my dream house that I really love this is what it's worth now. It's crazy.
We do. We really do see, those different stages of grief. And it's funny. Some people come around quicker than others. There's plenty of people that I'll talk to, for maybe a 6 or a 12-month period of time who just aren't there yet. And then there are other people who might come in and they're really fighting the idea. But at the end of, maybe a 45-minute consultation with them, they understand exactly where they're at, how this makes sense for them, and they're ready to go.
Okay, so let's take this from the perspective of the bank. If I'm a bank, I'm the Bank of Ron, why in the world would I settle with Wes Jones from HowShortAmI.com? You have the documents with me. They're signed. We signed this thing for, I'm picking numbers out of the air, for $400,000. And now you're telling me it's worth $320,000. Why would I settle with you? I'm going to, let me take you to court. I'm going to sue you. I'm going to take you for everything you got. Why would I do that?
That's a great question. And that's probably one of the first questions that I get when I meet with somebody. And short sales, they get approved for one reason and one reason only. And it's that they mitigate the bank loss versus going through the foreclosure process. So what that means in layman's terms, somebody or the bank is going to recover more money by participating in a short sale than they are by actually seeing the foreclosure process through. Now, in a short sale, the bank is going to recover about 80% of their loan on average. So that's an all right number versus 60% is the numbers that they are going to recover on their loan if they actually go through the foreclosure process.
Plus, if they foreclose, now they have to mow the lawn, they have to maintain the house, the bank has to hire a real estate agent. It becomes a major headache for them, correct?
It really does. And, not to mention how long it can actually take to go through the foreclosure process. And when somebody's going through the foreclosure process, the mortgage isn't getting paid. So, now it could be 12, 18 months down the road and the bank has not received a single payment. Now they own this property. Who knows what condition it is in. Now they've got to put the property back together. Now they've got to go out and pay somebody to sell it. And now they've got to hope to find a buyer. So it really is in their best interest to participate in a short sale. And really at the end of the day, the banks don't want your house. They really don't. They're not property managers. They lose a tremendous amount of money by going through the short sale process. The foreclosure process.
Plus, they have all the staff, and we extrapolate this out. They might have 1,000 or 5,000 or 10,000 of these exact situations. In a sense, not that you're doing them a favor, but you're kind of helping them avoid pain.
It really is. It is, I believe, and the banks believe that it is creating a win-win situation. The win for the bank is they mitigate loss. They get to recover more money by doing a short sale than they do by going through the foreclosure. The win for the homeowner is they get to avoid foreclosure. They get to avoid the major impact on their credit, and they get to move on with their lives and move on from a difficult situation.
Okay, so I'm talking to Wes Jones here from HowShortAmI.com. We're sort of talking through the way a short sale works. So we emotionally come to the decision we're going to short sale. We go through the documents. We finally get a value for the house. We put it on the market, and then it's different than a regular sale. People are going to come through now, and it's not like you just go, here's an offer, and we close, and it's a done deal. This thing is going to be protracted. I think people need to realize that going in. It takes longer to do a short sale.
It certainly does, and it is not a short process. And once we get a house on the market, though, we're going to market this property like we would any other, traditional home. And, these days homes are going faster than they were a year or two ago. Oftentimes we're seeing it, take anywhere between 15 and 45 days to get an offer on a property here in the Puget Sound area. Now, once we get that offer, that's really when the heavy lifting begins. And that's where kind of the slowdown occurs. It's like, when somebody decides to do this process, they're working very fast and furious to getting their documents in. We're getting their house ready to list, and now we've got it on the market. Once we've got that offer, things tend to slow down from a consumer standpoint. And, depending on the banks and depending if there's one or two banks and just depending who we're working with, that short sale negotiation process, that can be, 60 to 75, even 90 days. And that's if everything is going smoothly.
How has the negotiations evolved since the bubble burst? I can imagine when short sales were relatively rare, that the bank had more of drew more of a hard line, or maybe I'm just assuming that.
It's not that they necessarily drew a hard line. They didn't know what they were doing. Like a lot of real estate agents and a lot of homeowners really just didn't know because there wasn't that information out there and there wasn't that many that have gone through. They did not have the big departments that they have today. So it really has evolved in the last 5 years. And I'd say it's really evolved in the last 3 years. When we got heavy into this type of real estate, 5 years ago, it was difficult. It was always a battle. And then I would say about 3 years ago, things didn't necessarily get easier, but there was a process and there became more of a uniformed process. And the banks had finally done enough of these where they'd gotten their systems together, they'd gotten their short sale departments in order, where they really could, approve these, in a reasonable amount of time. So when you hear these horror stories of short sales taking a year or two, we see that every now and then. But that's really maybe an older story, and that's an older concern that somebody who may have gone through this process a couple of years back, it happened to them. We're not seeing that happen today.
I can imagine that you can't understate the value of you knowing people at all of these banks, because at the end of the day, there's a person sitting at a desk that has this file in front of them, and if they go, oh, that's Wes from How Short Am I, that you can pick up the phone and call them.
Absolutely. Our biggest value add to our clients is our contact lists within the banks. It's that simple. It's funny, when we were getting going on this, they were starting their short sale and foreclosure department. So the people that are still around in those banks that we were dealing with, on the entry level, a lot of them are, vice presidents and senior vice presidents today, in their respected departments. So we still have to go through the proper channels, but when, if we ever get stuck on a file, it's nice to have those contacts. It's nice to know who to call because we've been doing business with them for so long, and they know that if we're coming to them, that something is off and that this file needs some additional attention. Okay,
it's Ron from the Ron and Don Show. I'm talking with Wes Jones from HowShortAmI.com. They are the number one short sale team in the country for Keller Williams, and they're right here in Bellevue. Wes, people have heard me say in the spot, and I can feel the eyeballs rolling, there's no fee to the homeowner. And we've been told if something seems too good to be true, it's too good to be true. What's the catch? That can't be right. Where are these hidden fees?
A great question, Ron. And it is true. This is a service that is free to the homeowner. So when a bank identifies a property and goes ahead and agrees to a short sale, they've decided that it makes more sense to work with this property in a short sale scenario than a foreclosure. So they're going to also take the position that this homeowner is in a position that they cannot pay for the title fees, the escrow fees, the excise tax, which is real estate sales tax here in Washington, and the real estate commissions. They go ahead and pay those out at closing out of the funds that would be going back to the bank. So it is a free service.
Is it possible? Are there scenarios where the homeowner has to come to the closing table with some cash to get the deal done?
That's very possible, and that's something that we always talk about. First loans and second loans are treated a little bit differently here in Washington. We are seeing contribution requests for second loans somewhat frequently. A bank oftentimes likes to see about 10 to 20% to settle a second loan. So if we're not able to get a payment that's at 10 or 20% of the total of that second loan, the bank is going to look for some type of payment to get to that number to go ahead and release that balance. Now, we're also seeing some contribution requests on first loans when the banks feel that it's more of a strategic decision.
All right, so there's no fee, but it's not consequence fee. So let's talk about the consequences to people. So we're going into a short sale with our eyes open. First consequence I would see is that as a family, you're sort of hitting Control-Alt-Delete on your life here. You're making a decision that we're going from this direction to that direction, and that is a real-world consequence that you're going to have to deal with. So it probably means you're going to be renting a house for a while. You're going to have to move. You're going to have to give up on this particular dream in its current form. Let's start with that consequence first.
That's right. There are some consequences, and the way that I look at it is you're starting a new dream, and you do have to make some moves. You will be looking at going into a rental house. I would say that 9 out of 10 people that we're working with go directly into a rental property, and you're probably looking at being there for 1 to 2 years, at least. And that's what it's taken most people to get their credit to rebound. But really, I think it's more just the time that they're taking off from getting out of an experience that maybe was a little bit uncomfortable.
What's the typical reaction once it goes through and a family gets into their rental, and then you do a follow-up phone call or they contact you? What's the usual response?
Well, I'll tell you what, the day that I call them and I congratulate them on no longer being a homeowner, I usually get a pretty good laugh out of that one. But I've never had people been so thankful, for that day to come.
They don't realize how much pressure they're under.
Yeah, exactly. Most people feel like when they go ahead and make that decision, it's like the weight has been lifted off their shoulders. And then the day that it closes, I've had people, say that, one of the best days in their life, and that they're really able to move on with their lives, move forward to what it is that they need to do.
So let's talk about the consequence of our credit score. We've been raised to believe that is a holy number, that we should at all costs protect that number. What happens to my credit score? How much of a ding am I going to get? Yeah,
the banks and the credit agencies, they've done a really good job of getting us to buy in and believing that credit is everything. And the fact of the matter is that credit is not. There's really only 2 things that people need their credit for. Number one is buying a home. And second, is maybe if you are a small business owner and you need a line of credit for your business, and your personal credit is tied to that. Those are really the only 2 scenarios where we're really seeing people's need their credit. You can still rent a house, you can still rent an apartment, you can still go lease or buy a car. So credit isn't the end all be all that they've let us believe. But
so let's say someone had a credit score in the 600s, 700s, and then they do this short sale process with you. What happens after it closes? Does it drop to 200, or does it drop 100 points, or is it all over the map?
It's all over the map, and it really depends what has been going on the last 5, 7, 10 years with somebody's credit. Everybody is different, but there are plenty of cases and plenty of people that we're working with that it does not impact them all that much. If somebody is only working through a short sale, is current on their other bills, has not had any other, catastrophic events, in the life that would affect their credit, I can't say for certain, but a lot of times, what somebody's credit score drops, it may be only 50 or 100 points, which really isn't all that much in the grand scheme of things.
Because if you did a bankruptcy, it's shot for
if
7 to 10 years.
That's right. If you're going through bankruptcy or foreclosure, you're looking at probably an immediate 250-point drop. But really what it is, it's the time that it takes to recover lasts so much longer.
So give me some real world examples of clients that you've had, and how long it took them to buy another home after they did a short sale.
I'll give you an example that just came up last month with somebody's credit score, and he had a great credit score, and he was concerned about having that impacted. He was at about 800. We went ahead and went through the short sale process, and it dropped down to about 720 points. It's an 80-point drop. It's really not that bad. But what he was surprised about was when he went and pulled it 3 months later, he was already back up to a 750 credit score. So he'd already owned a home, so he wasn't ready to purchase again, but he was real excited to call me and just let me know that where he was at, like it had almost not even happened. Now, your average person, had been looking at anywhere between 2 and 3 years before they could purchase a home again.
Okay.
That would be a very realistic number.
It's better than 7 to 10.
It absolutely is. It's really not that long. And what we've seen, though, here in just the last 5 weeks is the federal government has come out with a program through the FHA that is allowing people who've gone through a short sale to buy again in as little as 12 months.
Wow. And I mean, the thing that I guess another way to look at it is not only my credit score drops 80 points, but I got rid of a burden of, for some people, several $100,000 of underwater equity on their house. So, I mean, it's almost like getting a second job. You're shedding that much money.
That's right. No, you really are. You are, it's a catapult to, getting out of debt. And if you're looking at being able to buy a house again in as little as 12 months, maybe as most as 24 months, that's a pretty big swing from where somebody was before we started that conversation.
Let's talk about another consequence, taxes. What is my tax liability? Is the IRS going to go, oh, well, hey, we forgave 150 grand. We're going to tax you at 30% on that. Here's your tax bill.
That's right. That's a great question. And I've got to be really careful how I answer this because, I'm not a CPA, I'm not a tax attorney, but there are some tax consequences that are involved with a short sale. So I'll try not to bore you with the details, but really the way that the government looks at this, the way that the IRS looks at canceled debt is they see that as potential taxable income. So if we are looking at a short sale scenario and we've got a loan balance of $300,000 and the property sells for $200,000, you've got $100,000 there of debt that's been canceled. So the IRS sees that as potential taxable income.
And then, so what are we seeing here recently, though? Is there some legislation to help people out because we're trying to get the economy kickstarted?
That's right. And when short sales and foreclosures started becoming a big part of the market back in 2006 and 2007, the government actually took a look at this and said, hey, these people have already been through so much. How do we go if somebody's lost their home, they've lost all this money, in a short sale, how do we go and tax them? On top of that. And they came out with something called the Mortgage Debt Relief Act. And what the Mortgage Debt Relief Act allows a owner-occupied homeowner to do is to be exempt from paying taxes on that canceled debt.
Wow, that's another huge. I mean, that you're saving $30,000-$40,000 there.
You're saving thousands of dollars, if you take advantage of the Mortgage Debt Relief Act.
So, Wes, we always hear this, there's no fees, yada, 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 but there are some obligations that the homeowner still has.
That's right. It is a free service, but it's not necessarily a get-out-of-jail-free card. There are responsibilities that a seller needs to commit to and maintain while they're selling their home. It's really not that big of a deal. We're looking at the basics. It's keeping your utilities current. It's a really good idea to continue paying your homeowner's insurance. Oftentimes that gets paid through your mortgage, through an escrow account. So if somebody's not making their mortgage payment, they're likely not making their homeowner's insurance payment as well. So they want to go ahead and do that separately. If they happen to be in a homeowners association, maybe they're in a condo, a townhouse, or a planned community where there's a HOA on a monthly basis, they need to make sure that they're continuing, to pay those as well, because that's just something that we're not seeing the bank, pay for at closing. As long as those obligations, are still met, and as long as the property is lien or judgment free, that should be it.
And so, Wes, the short sale process that you go through, there is a little bit of pain involved, emotional turmoil. It takes a while. It's a little bit of a stressor. But at the end of the day, you get out and you're in a much better place.
Yeah, absolutely. And, we talked about how long it can take. Our average short sale does take 5 months. We have short sales that take less. We have them that take much longer. It is a process that you have to be committed to. There's more paperwork involved than I would want. There's more paperwork involved than a homeowner would want. But when it's all said and done, this is a real kickstart to moving forward from a bad spot. And I have yet to have a client come back and say, I wish I didn't do that.
Okay, so let's talk about howshortamI.com. We do commercials for it all the time here on the Ron and Don Show. You and your partner, Brian, why even invest all the time and expense into creating this website? What does it do for people out there?
It's real simple, Ron. And what it does is it's a tool that allows people to understand exactly where they're at. And what people do is they go into the website, they go in and plug in their address, they plug in some of their loan information, and we're going to go ahead and send them a bounce back report. It's going to let them know how upside down their property is. It's going to let them know how long it could take to break even on their home. And it's also going to let them know how much money they're going to spend on a monthly basis to get back to that break-even point.
Okay, so without giving away your secrets, because you guys have invested a lot in this website, how do you generate those numbers?
Yeah, we're pulling it from a number of different sources. We're going to look at tax records. We're going to look at recent sales in your neighborhoods. We're also going to take a look at Zillow. We're going to run through an algorithm, and we're going to come out with a number that's going to, estimate how much your property is worth.
It's going to put us in the ballpark.
It's going to put us in the ballpark. And it's not always exact, Ron, but it's awful close. What's more important, Ron, is it's going to let you know how long it's going to take to get back to even. But on top of that, it's going to let you know how much real money in mortgage payments it's going to take to get to that break-even point.
And so what's the response that people give? I know there's not one response, but people go to the website, they've had this anxiety, they finally put their info in, and do you get an angry phone call? Do you get a phone call where someone's crying? Do you get a desperate phone call? Well, I'm sure there's a big range, but it's probably a wake-up call.
It can be a wake-up call, or it can also confirm what a lot of people know deep down. And it goes back to, where that person might be at in accepting exactly what's happened to their house over these last couple of years. So we don't usually get too many angry phone calls. I think more than anything else, we get a lot of affirmation that, when I call somebody who is plugged into the short sale calculator, I'll just ask them, what did you think? And more often than not, well, it's about where I thought I was. This confirmed what I had been thinking.
And so the other thing, especially in the Puget Sound area, is we hear all the time, oh, the market's up 15%. There's a brand new condo building being built here, and look at all these cranes. And so if my house is on Queen Anne, or if my house is on Capitol Hill, or my house is on Finney Ridge, I'm probably doing pretty good. But if my house is in Kent, or my house is in Auburn, or my house is in Renton, or my house is up in Bothell or Kenmore or whatever, I'm probably in a different boat.
Ron, you're right. There are plenty of areas like Capitol Hill, Queen Anne, West Bellevue's, and others that really were not affected all that much in the first place. There's no doubt that the market has seen a great run over the last 12 months. That's true. However, the appreciation that we've seen over the last year is going to be tough to sustain moving forward. And we just got to look at what was driving that market, what's been going on. And what has really been driving the market of the last 12 months has been the low interest rates that we've seen, the very low inventory, and the pent-up demand that we've had from the last 4 years. Over the last 4 or 5 years, while we were going through this, there weren't a lot of homes that were being sold. But what has changed recently is we are seeing interest rates pick up from where they were a year ago. Inventory has increased each month over the last 6 months, and it looks like the overall buying fever has subsided a little bit. With the increase in home values and the increase in mortgage interest rates, that has a direct effect on the affordability of housing in the area. That, coupled with the seasonal cooling that we're seeing right now, leads me to believe, and a lot of other people too, that we're heading back to a more normal market with average appreciation to maybe even slow appreciation. Unfortunately, average appreciation just isn't going to help enough people through this, and we don't have to get that far out of the core of the city to see a much different picture. Condos and attached housing like townhomes are going to take even longer to recover. I'm talking to so many different condo and townhome owners right now that are anywhere from 35 to 60% upside down today. It's unbelievable what I'm hearing from these people and the stats that we're running on them.
Okay, so what would your final advice be to someone who knows they're in a tough spot, they emotionally know they're in a bind, but they're still hesitant on whether a short sale is their solution?
Just give me a call. I will spend as much time as needed with somebody on the phone or in the office and going through their questions and concerns. And really, I think most people's hesitations are, common questions that you and I have, talked about and answered right here. They might be worried about what happens with their taxes. They might not think they can afford to do a short sale. They might be worried about the repercussions that a bank has by doing a short sale. Most people think that they are still going to owe on their loan. In most cases, I would say 9 out of 10 of them, they do not. No agent worth their salt is going to allow a homeowner to go through the short sale process and not put it in writing that the bank is going to forgive the difference between what is owed and what the property sells for. And we're seeing banks put this in writing in their approval letters 9 out of 10 times, maybe 99 out of 100 times. Very rarely is it left open-ended.
And then my final thing is I want you to just speak to it one more time. The perception that this is shady, that it's somehow underhanded, that it's somehow outside the norm of the real estate industry, that perception is so strong. Just speak to it one more time.
That perception is very strong, but I feel that it's also very outdated. I think what people really need to understand is how many people in this country and people here locally in the Puget Sound that have gone through this process. This is a process that my partner Brian has gone through. This is a process that I have personally gone through. I have helped my friends and family through it, and I've helped, hundreds of your listeners as well. And it's not something that has to be a dirty word. A short sale can be a game changer. This can be a lifesaver for somebody financially.
And I guarantee you, if you're at a cocktail party and you say, I'm going through a short sale, the reaction's not going to be judgment. It's going to be 6 other people pulling you aside and going, who's your guy? Because we're upside down too.
You're absolutely right. It's not something that people are celebrating from the top of a mountain at this point, but they will pull you aside and say, hey, I'm in this exact same situation. What do you know about it? Do you like who you're working with? Is this somebody, that I should talk to? And it's becoming less and less of a dirty word. And I think that, the longer that this goes on, the more and more accepted that it's going to be. But I think that if really people just understood the facts and the mechanics of how this works, we wouldn't even be having this conversation.
All right, so if you are curious about a short sale, you've heard me do the spots, you listen to this recording here and think, well, that makes sense. Go to howshortamI.com, fill out the form, just like we always say, and then you will get a follow-up from Wes or Brian, and we're going to walk you through this. There is hope for you, and that's the thing that's exciting to me, and that's why I endorse it, Wes, is it really is a message of hope. It sucks to be behind the 8 ball. It sucks to be wondering if you're going to make your mortgage payment every month. And it sucks to feel like I failed. And so to know that this really isn't my fault, that I got caught in a bad timing and a sort of the perfect storm of bad luck in a lot of ways, and that there's a way out. That makes me happy to know that people that listen to our radio show, listen to this podcast, maybe it's going to be 3 months or 6 months down the road, are going to be in a much better place. I like that result.
And we like it too, Ron, and that's why we do what we do, and we do really appreciate being on your show and your guys' endorsement. But we like helping people, and we're gonna be here. We're gonna be doing this until we've done the last short sale here in Seattle. Last month the Puget Sound Business Journal reported that 1 in 3 people in the Seattle area are still upside down. We'll do this until the last person that needs help that's upside down has called us, and we get a lot of satisfaction out of helping people move on from what they considered a bad situation.
All right, so check it out, howshortami.com.